You're now listening to the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Presented by NYSHAX.
Hi, everyone. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline Weaver, and with me is Lars Jensen. Lars, how are you doing?
Doing excellent. If it's a little bit dark here, it's because it is dark. It's late evening here. I'm in Bali, Indonesia this week.
Oh, wow. Amazing. What are you doing over there?
Oh, this is pure relaxation and fun. Been out snorkeling all day, so what's not to like?
Oh, that sounds so cool. All right. Well, I'm a little jealous, but it's nice here in Austin too. Just a little overcast, but let's go ahead and get started with the episode today. So could you talk a little bit about where the rates are at?
Yeah, if we start out where we usually start with the quoted spot rates from the ESCFI, we start into the new year here with a slight increase on Asia, Europe, and Pacific, but nothing really major. Some pretty steep declines, though, from China to South America, both East and West Coast. Did a little bit of further digging into some of the spot rate developments, and if we try to link it up with the seasonality that we tend to see, the reason seasonality is interesting, of course, as I hope everybody is aware, Chinese New Year is coming here in February, and there's always a peak ramp up towards Chinese New Year. So the question is this a seasonality effect? And at least looking at data going all the way back to 2013, if this is a seasonality effect, it has started way earlier than usual, and it has now already increased to a point where if seasonality is to explain the increase, this is it. We're at peak now. So if we see any further increases in the coming weeks, that is beyond what seasonality can explain, or we might simply be looking at a seasonality peak earlier than usual. At least that's from the quoted perspective. If we then switch over and look at the NYFI index in terms of what's actually being paid for cargo being loaded, we almost see, I was about to say, the usual somewhat mixed bag, especially here on the US West Coast trade coming over from Asia. Because yes, there is an overall increase, but it masks some pretty significant deviations. If you're shipping from Northeast Asia, there was basically no change. If you're shipping from China, you're up almost $130. If you come from Southeast Asia, you are down more than $100. And even more interesting, if we look over the last 2 weeks, which is also interesting, sometimes we tend to be caught up in just the week-on-week changes. But what I find fascinating is if I compare the difference in rate between if you ship from China or if you ship from Northeast Asia, what we now find is that just 2 weeks ago, shipping from Northeast Asia had a premium of $500 compared to China for a 40-footer. That premium now rapidly declined to $150. And this begins to speak into a pattern we have seen multiple times over the last year. There is a clear arbitrage between Northeast Asia and China. And it's logical that this is what we would find because it's the same ships. A lot of the ships that come from China, not all of them, but many of them, make a stop typically in Busan, which means depending on how the carriers allocate capacity between China and Northeast Asia, if you suddenly see a strengthening in the market in one of these, you would see a shift in allocation. So very rapidly, you see a spillover effect in rates fluctuating back and forth between China and Northeast Asia market. This is becoming evident in the data as we get more and more of them. Asia-US East Coast rates, that was a bit more stable across the different subtrades with slight increases. Atlantic westbound rates for loaded cargo, not doing well at all. Declined $40 per 40-footer. It doesn't sound like much, but it comes at the tail end of continuous declines for a long while, which means that the head haul Atlantic now is at the lowest seen since November 2023. So for more than 2 years, very, very weak on the head haul there. Asia North Europe continues to increased on 40-footers by $150 or so this week, which means that we are now reaching a new high point, but it's not a historical high point. It's the highest we have seen since September. And again, this is part of the ramp up, I would rather say, towards Chinese New Year.
And when do we typically see the peak end pre-Chinese New Year?
Yeah, normal seasonality, and again, this is based on data from 2013 to 2025. Usually on the Asia to US West Coast, you will see a peak 2 to 3 weeks before Chinese New Year. Into US East Coast, you would see the peak about 3 weeks before, and on Asia Europe, you see the peak 3 to 4 weeks before. And this is actually kind of logical. Again, this analysis, because it has to go back so far, is more based on quoted than actually paid rates. And if you think it through, from the time where you quote until cargo actually gets loaded, as we can see from the NIFI, it typically takes 3 weeks. So if the intention is to get cargo loaded prior to Chinese New Year, it makes sense that the rate peak then happens roughly around 3 weeks prior to that, because that's your last chance of booking cargo to get it moved prior to Chinese New Year.
And if I'm not mistaken, I believe it starts mid-February this year, right? And it's a little bit later than it typically is.
Yeah, it's almost as late as it can be. It's February 17th this time around. So if we follow normal seasonality, we should see peaks towards the end of January.
Okay, awesome. All right, well, thank you for sharing that. And I think it would be good to talk a little bit about demand and how we're seeing it impact the rates here. Could you talk a little bit about the new CTS demand data?
Yeah, container trade statistics came with their usual monthly data. And if I was to put, I was about to say one word, in reality, it's 2 words on global demand. It would be extremely strong. If we try to break it down a little bit, the global growth in TEU was up 7.2%. That is the highest year-on-year growth we've seen in all of 2025. So mind you, this is cargo loaded in November. I don't think we specified that, but it's the November data. TEU up 7.2%, the highest we've seen during 2025. If we measure TEU miles, which we sometimes also look at, we're actually up 8.2%, also the highest in 2025, if we take into account Chinese New Year effects. So even at that one data point, we see an extremely strong market. But when we start to then dive into the details, it becomes even more interesting. We have in recent months taken to separate North America from the rest of the world, again, to take into account the effects of the US trade war, is where it becomes really interesting. If I look at all cargo related to North America, so imports and exports combined, it's a decline of almost 1%. This is then, I think, the 6th consecutive month with negative volume developments. The imports are down almost 4%. Exports are up around 6% for North America. But exports are much smaller, which is why in the aggregate, US container volumes are still down. However, if I then look at container volumes for the entirety of the rest of the world, only excluding North American cargo, demand is up more than 10%. This is extremely strong demand growth that we're seeing here. And this is across the whole world. If I then start to look at least some of the trades, and I won't bore everybody with too many numbers, but if we look at some of the key trades, this is where it becomes interesting. So if we start on the Pacific, so from Far East to North America, volumes are down 5% in November, year on year. It's the only one of the major trades that's down. Far East to Europe is up 16%. Far East to both Latin America, Indian subcontinent, and Middle East, that's all up 20%. And if I look at Far East to Sub-Saharan Africa, it's a whopping 34% increase. Which is again why, if I was to characterize demand in November, it is indeed extremely strong, with North America, as we have now become accustomed to during much of 2025, as the only odd one out, not tapping into this growth.
Yeah, it's definitely part of the continued pattern that we've seen where there's quite a significant divergence between demand from the US and other places around the world.
And from a carrier perspective, this is definitely good news that demand continues to be as strong, because let's not forget, even though 2025 didn't see a massive injection of new capacity, we saw a whole raft of it in 2024. And in order to avoid too much overcapacity when the Red Sea reopens, the carriers do need strong demand growth to absorb some of this overcapacity.
Yeah, that's a really good point. And there's quite a good amount of expected capacity to be deployed this year. Is that correct?
Well, it's not that it's going to be massive this year. It depends a little bit on data source and how aggressive you are on potential scrapping, but probably up 4 or 5% on the capacity side versus a baseline outlook around 3% or so for global demand.
Gotcha. All right. Are there any updates on the tariff front, or is it a quiet week so far?
On the tariff front, it's a quiet week. I would say that's nice because while we got quiet on the tariff front, we probably got a lot more not so quiet over on the geopolitical front instead.
Let's talk about that.
Where on earth do we start? We spoke the Red Sea just before, and that might be a good place to start. Not Red Sea directly, but indirectly. One of the geopolitical issues that really warrants some attention now is Iran. We have had massive protests and now riots in Iran ongoing for at least a week. Iran has been cut off from the internet here over the last 4 or 5 days. This is not the first time that we see riots like this in Iran. During the whole regime for decades, this pops up every so often, and on all previous occasions, it has been violently quelled and led to absolutely nothing in terms of regime change. At this point, we don't know. It might be the same thing, and this might again be quelled. The counts are several hundred dead already. That's not unusual when these things happen, unfortunately. And it might be that this fizzles out and the whole situation is unchanged. Where it becomes interesting is on two fronts. One is if this actually does lead to a regime change. If that happens, that would basically also cut off all the support for the Houthis. Keep in mind, the Houthis are supported with material and money from Iran. Iran is behind the Houthis. So if the Iranian regime falls, that could actually fast track a reopening of the Red Sea. So there is a connection over to shipping in that direction. The other element to watch is a statement coming out of the Iranian government yesterday on Sunday, basically warning that if the US intervenes, which is what Trump at least has alluded to, Iran might then choose to target the American interests in the region, including shipping interests, and that brings the Strait of Hormuz back into play. So the events unfolding in Iran could be a whole lot of nothing in terms of impact on shipping, or it could be a significant impact. So it definitely warrants close monitoring.
So if the second happens where they're interrupting trade in that region, what trade lanes would be more impacted?
Yeah, there was speculation also last year in terms of whether we might see an impact in the Strait of Hormuz similar to what we saw in the Red Sea. It is still a theoretical possibility. It would not be possible to close the Strait of Hormuz, but what it would do is it would likely reduce some of the capacity going to and from the Persian Gulf. It would increase freight rates going back and forth because you're going to see insurance rate spikes, and it would impact some of the transshipment operations taking place up in the region.
It's an interesting thing to discuss because we've already been talking about the possibility of the Red Sea fully opening up in 2026. We've been talking about it for over a year now. It would be an exciting update.
If I think back 2 years ago, this is when the Red Sea crisis erupted, 2 years and 1 month. And at the time, there was a lot of talk. I was also invited there to a lot of fora to talk about how could this be resolved quickly. And back then, 2 years ago, my position was that I didn't see there was a military solution, and repeated bombing campaigns, both during the Biden and Trump administration, have proven that bombings didn't really change the situation. And what I also said 2 years ago was the key to resolving that one was to get Iran to stop supporting the Houthis. But realistically, at the time, I didn't see there was any path to convince Iran to do that. A fall of the regime would definitely do that.
All right, some major happenings there. I also wanted to ask you about Greenland. So, what's going on with that?
First, let's be clear, from a container shipping perspective, Greenland is not interesting. It's tiny, tiny volumes that move back and forth. So this is not why Greenland should be on everybody's radar. The reason we should watch it is what actually happens if, and I really stress the if, the US decides to basically take over Greenland without an agreement, because that is what is being put on the table by the US government. If that eventuality happens, the EU will be forced to respond in some way, shape, or form. The only tool at their disposal is trade policy. So if that was to happen, we are likely going to see a very, very significant trade sanction response from the EU, which would wreak complete havoc, especially on the transatlantic trade, with relatively unpredictable ramifications. So Greenland should be monitored, not for the case of Greenland itself, at least not if we are in container shipping, but for the enormous ramifications and ripple effects it would have if we see what would de facto be a hostile takeover of Greenland.
Yeah, I don't think we want to add trade sanctions against the US into the mix with all the turmoil that the tariffs have already caused. We're kind of at a place where it's a bit settled, more or less. So we'll keep an eye on that. Hopefully, nothing major to report soon. And I also wanted to ask you about the MSC BlackRock deal. It's something that we talked about back in 2025. Are there any updates to share on that?
Just to recap for those who have forgotten all about it, it was back in early March last year. It was announced that Hutchinson was going to sell all of their non-Chinese terminals, and they're going to be sold to basically a collaboration between BlackRock and MSC, which would make MSC de facto the world's largest terminal operator. Since then, there's been a lot of negotiations back and forth. The Chinese government absolutely didn't like it. It seems that they wanted Costco to go in and be a co-partner. The latest information I've been able to see, that was a report coming out from Financial Times, so I cannot necessarily vouch for its accuracy. But that was basically alluding to that the deal might fall through because they can't agree on a deal. If that happens, we're again back to the geopolitical stage, because again, let's go back in time. What's that, almost 10 months now? This deal came in the backside of the new Trump administration at the time wanted to take control of the Panama Canal. One of their key arguments was that they saw too much Chinese control. You can always discuss at length that there's no truth to that claim, but the thorn in their eye there were the two Hutchinson-operated terminals in Panama. The sale of those terminals basically took the problem off the table. Well, if a deal falls through, the problem between U.S., or rather the problem the U.S. has with Panama, it doesn't go the other way, is suddenly completely unchanged to where we were in late February last year. So on the geopolitical stage, I would not be surprised to see the Panama Canal issue resurface once more.
Yeah, that'd be interesting to see it in the headlines again, because it did very much quiet down when that sale was announced. And then if this falls through, it'd be interesting to see what happens if another entity into buying it, or what would happen.
Yeah.
So we'll keep an eye on.
And again, with the caveat that this is not necessarily confirmed that the deal falls through. And also, what do we mean by a deal? It might then not be a deal for all terminals, but there might be individual deals for some terminals. And if you then have a deal just for the two Panama terminals, for example, at least the geopolitical Panama issue then goes off the table again.
Right. All right. Well, interesting stuff. Thanks for sharing on that. Is there any other updates you wanted to share today?
Oh, you mean any other cataclysms I want to scare people with? No, I think this is what is really the most pertinent issues, at least this weekend, for all the geopolitical ones. Let's hope they all pan out for the best.
All right. Awesome. Well, thanks everyone for tuning in. We'll be here next week. Thanks for subscribing. We're on Apple Music, Spotify, also on YouTube. And I hope everyone has an awesome week. Bye, everyone.
Thanks for listening to Supply Chain Secrets Podcast, presented by Nice Shacks. Be sure to subscribe on your favorite podcast app. Want to be a part of the show? Register to attend a live recording at the link below.